Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 29th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. You can see some weakness here in crude oil. Before we get on to that, did touch on the 40 handle this morning. We bounced up and away from that, not really based on any economic data points or anything, but more so I think that 40 handle is going to be defended. And I wouldn't expect really much different with the amount of slide we've seen, this downdraft in crude oil that quickly needs to have some kind of bounce. I think the shorts are going to be looking to cover rather quickly. We are way overextended to the downside, so the momentum should be building. Not really momentum is the wrong word, but the shorts are going to want to cover here pretty soon, and then it's going to be lockstep falling over each other to get out. I think that'll cause us to get a nice little bounce here. All right, but on to the overall economic data. Let's talk about across the pond. We've got German preliminary consumer price index with CPI came in at 0.1%, expected to be 0.2%, so slightly lower than expected there. French consumer spending came in higher than expected at 0.8%, expected to be 0.5%. They did revise last month's number down by that basic 0.3%. So it was 1.7. They lowered it to negative 2%. So that minus 3% on the revision kind of makes this headline number pretty flat. Then we got preliminary GDP out of France, and it came in in line with expectations at 0.4%. Spanish CPI, Consumer Price Index, came in at 1.7%, lower than the expected 2%. No revisions to the previous, so lower here. Not really that great of an economic data point. And German unemployment change was a little bit better than expected, a negative 16,000, expected to be a negative 10,000. Then we've got, let's look at a couple other things. Let me see if I can find something here. I know I saw a couple other things. All right, nothing else overseas. I thought there was something else over there that I wanted to talk about. Okay, back here in the United States, we got core PCE, which is personal consumption expenditures. Price index came in at 0.1%, slightly lower than the 0.2%. As far as I'm concerned, that's not a bad economic data point. I'd rather see prices stay relatively low. Personal spending upticked from what was expected to be 0.4% to 0.6% heading into a holiday season. That's good. One thing we always talk about here, well, let me talk about the revision real quick with personal spending. The revision from last month was 0.4%. They revised it down to 0.2%. So that makes the headline number a bit of a wash there. It is good to see consumer spending start to pick up. We are heading into a holiday season, so that is expected. One thing we don't like to see, though, with this personal spending number, when we start seeing personal spending go up, we would like to see personal income go up as well. We haven't really seen the personal income ratchet up as of recently in line with that personal spending, but we are now starting to see the personal income uptick. Came in at 0.5%, expected to be 0.4%. I think that's the best reading we've seen for personal income upticking in the last 6 months. So nice to finally see personal income starting to keep up with personal spending. And then unemployment claims is just preliminary. Came in at 234,000. Expected to be 222,000, so more people looking for employment is causing the unemployment claims to go up. That's not really unexpected heading into a holiday season. Also, people looking for side jobs or people that are discouraged workers that may have found a job but aren't really in the job that they want to be on. Maybe it's a part-time job, but they are, a C-level executive but need to have a job. Disparaged workers. So then on to personal income. Like I said, that uptick. Natural gas, pending home sales. Sorry, geez, I'm all over the place today. Pending home sales came in at a negative 2.6%, expected to be a 0.8%. So a big miss on personal home sales. So that, or pending home sales, that is not really that good. I wouldn't really expect a whole lot of people to be buying homes in the winter. That's just not usually what we see. But having said that, this is a big miss and a bit of a concern for rising interest rates going forward. One thing we do get later on today is the minutes from the last FOMC meeting. So that should give us a little bit more insight as to what they think going forward they're going to be doing with interest rates. I think they should hold off. Hopefully there's at least a little bit of rhetoric in there about maybe pausing. All right, natural gas storages came in at a drawdown of 59 billion cubic feet, expected to be a drawdown of 76 billion cubic feet. That could be a bit of what's driving crude oil, but I think crude oil is really a product of this massive, almost, that's probably close to a 60, almost a 90-degree angle, which is pretty scary. But that sell-off, I think there needs to be a little bit of a bounce at this point, maybe come up and test this Fibonacci extension that I have here, but I doubt it's going to get that high. All right, let's talk about the rest of the markets. We've got gold futures moving higher today. Nothing other than we're seeing some weakness in the equities after yesterday's really late in the day rally, which was a good sign, good bullish sign. We're starting to see some pullback today, which is not necessarily what I want to see, but I think that my thesis on the way that these markets are moving, there's some big swings going on, but it is in and around that point of control, which should keep us in line in a sense, or at least relatively tight to this area for the foreseeable future until we get some economic data to really push us in one direction or the other. But gold, a product of the equities coming off. Bitcoin, I don't know if it's a product of equities coming off, other than I think people are just looking at it as this is bargain basement at this point. So they're starting to flood in there. People rejoicing the fact that we are back in the 4,000 handle. I don't know if it's that great of a coup. You need to get it back up into the 6,000, 7,000s for this really to start getting a grasp on some of these retail traders that are on the sidelines right now. All right, bonds are moving up, but only by about a half a point right now. Again, product of flight to safety with the equities coming off. Here we can look at the VIX. VIX starting to spike. Again, product of the equities coming off. When VIX spikes, it's usually because people are buying puts, driving some volatility into those underlyings, and then that reflective of the broader market. So let's look at the Dow Jones Industrial Average. It's only off by about 150, 160 points right now. It is probably, in terms of percentage moves, the best so far, I think. But we're down about 150 points here in the Dow. Then we look over at the NASDAQ. If I can pull up the NASDAQ, it's all funky. The NASDAQ here, again, off by about, let's say, 60 points on the day. Yesterday, rallied right up to the point of control, stopped right there. Today, we are coming back off a little bit, but again, we are very close to this point of control, which is not anything that I wouldn't expect necessarily, especially now that we are back in this area. I think we could see some juking back and forth like I talked about yesterday. Then we go on to the E-mini S&Ps, similar situation where we were kind of trading down around here yesterday during the daily market commentary, and then late in the day, which we will see reflective on the 30-minute chart here in a minute. Massive rally right at the end of the day, just almost unabated to the upside. Came up, tagged the Fibonacci line here, the 38 Fibonacci line. Today we're coming right back down to the point of control. So yes, we are seeing a bit of weakness today, but in line with the thesis that I talked about with all these markets kind of migrating back towards that point of control for at least maybe a week or so until we see some economic data that will facilitate a move in either direction, all right? This is what I was talking about. We were talking in and around, probably right here when I was doing the daily market, a little bit later, probably right around here on the daily market commentary. And then as you can see, as soon as I got off, the market just spiked higher almost to the highs of the day in a matter of minutes. A lot of that probably had to do with some of the stuff we were seeing coming out of England, Great Britain. Remember, I talked about those stress tests. Obviously, those came out a little bit better than what they were expecting. So we got that little bit of a spike there towards the end when those results were being released. All right, so let's talk about some things that I've done. Actually, I didn't do anything in Guess Jeans, but I just wanted to throw it out there. Yes, they did guide better on forward guidance. Millennials are loving the Guess Jeans. All right, back to Caterpillar. Yesterday, I put in a working order. I was just waiting to get picked off. I got picked off. I probably could have gotten this a little bit better had I just been watching it rather than leaving that order in there. But I wanted to stay mechanical. I needed to start offloading some of these long deltas that I have. There are very close to 50% of max profit, if not better, especially after yesterday's late morning or late afternoon rally. Caterpillar, I was able to get out of that. And if you remember, I did the DEES, sold the 110 puts in there for $1.22. I was able to get out of those for 55 cents yesterday on that rally. You probably could have gotten out a little bit better if you closed it right on the end of the day, which like I said, I had a working order in there. And I have working orders in here today for several things that I'm trying to get out of. XOM being one of them. XOM, I'm trying to get out of my DEES 70 puts in there. Excuse me, I haven't had these on for very long, but I originally sold those for 49 cents. And right now they're trading right around 13 cents. I am working an XOM bid for 6 cents right now. So I'm letting a lot of these things kind of work out, especially with that crude oil rally today, a little bit of surprise there. That should drive up the rest of the oil producers like XOM, ExxonMobil. So I'm trying to squeeze a couple of these out for a little bit better than 50% of max profit. I think once we start seeing this volatility really come out, it'll help too. All right, Apple. Apple's one that I'm kind of kicking myself for. Could have gotten out a little bit earlier today for much better than 50% of my max profit. And here I have on the December, and I am short the 160 puts in there that I originally sold for $2.06. I was working a bid in here this morning for 67 cents, better than 50% of max profit. Right now it's trading around 80. It got as close to about 75 cents when I got in there. It did trade much lower than that before I got in, but I think it had to have been on a spread. The pricing was way too low on what I've seen for the range in there. Also, I'm trying to get out of IBM. It was pretty close as well. And in here I have on the December short the 115 puts in there that I originally sold for. I originally sold those for $1.09. I was trying to get out of those for 50 cents this morning. They're trading around 77 cents now. As I said, a lot of these were very close. Today we are starting to see a bit of weakness going on right now. Market's starting to make a little bit of a recovery here. So hopefully towards the end of the day, like I said, I'll be able to get out of all these. So I'm trying to get out of FDX, XOM, IBM, Apple, and still working order in Under Armour, which is not even close. All right, that's about it. Like I mentioned earlier, we're doing a webinar on the long call diagonal spread. Great for this type of environment. Also, give me a thumbs up, thumbs down, like or dislike on this video. If you don't like it, let me know what it is you didn't like about it. That's about it. So check it out, Pro Trader Strategies, and if you can't take that, take it easy.